So the next 5 to 10 minutes are for you on the tax and the VAT regulations.
Okay,
good luck.
Thank you, thank you. So I will try to summarize some of the main topics on customs, VAT, tax, legal stuff in European Union. Of course, we cannot address everything during this 10-minute presentation. That's much too too much legislation and rules to cover. Topics, briefly, something about creating a gateway from a customs, VAT, regulatory and tax point of view into the European market. Some things about customs, some things about VAT. There was already a question on VAT. I will address briefly some regulatory issues and setting up an office or a company in Europe, if that would be necessary at all. First topic on slide number 3 is create a customs, VAT, tax and regulatory gateway into the European market. I think, based on experience we have with many other clients and experiences we have seen with other companies, it's not a good idea to ship products from Canada into the European market through maybe 5 or 7 or 10 different harbors or airports. That will create a lot of issues with customs, with local VAT authorities, but also with customers. In our view, it's much, much better to create a kind of central port of entry, deal with one customs office, with one authority. For example, if you want to have a testing and checking on the meat, if it is a meat import, maybe you need some health certification and some checks by customs, additional checks. It's much better to arrange everything with one customs authority, one customs office, instead of 4 or 5 customs offices. Furthermore, it's also much easier to deal with customs compliance when working with, for example, one customs broker. They know your products, they know the customs duty rates that apply, etc., etc. After entering the European Union through one central location, then the products will be in the free circulation, as it's called, the free circulation of the European Union, and your products will be in direct competition with the European products, meaning you can sell to every European customer you want. The next slide is about logistics via the Netherlands. I have highlighted a few questions that are very common, frequently asked questions. First of all, is it required to set up a branch office or a legal entity in the Netherlands when importing the Netherlands through the Netherlands into the European Union? The answer is no. There's no need to have any legal entity in Europe when you ship as a Canadian company products to the European Union. Importing and distributing via the Netherlands, does it result in corporate income tax liability? The answer is no, not necessarily. If you do not have an office, do not have sales forces, etc. in the Netherlands, you will not pay corporate income tax in the Netherlands. You will be subject to Canadian corporate income tax. But as such, there are many companies that can avoid tax liability in the Netherlands. Of course, when you are making sales through the Netherlands, so you have a sales force here in the Netherlands, for example, then at a certain moment you will be subject to corporate income tax in the Netherlands. A Canadian company can be the importer in the Netherlands, meaning as a Canadian company you can ship products to the Netherlands, have the product stored with a third-party logistics service provider, for example, and then import the products, and after that, after the Canadian company importing in the Netherlands, you can make the sale to a European customer. And value-added tax, that's the last question. Will VAT be due when importing? The answer is not necessarily. We have ways, a kind of deferment regime that applies. By applying that, you can avoid paying VAT. I will come back to that later. Maybe a few words on customs. Customs principles in the EU on the next slide. From a customs perspective, the EU is one territory. So in principle, it doesn't matter whether you import products through France or the Netherlands, there's always the same customs duty burden. However, the interpretation of the customs authorities, of the customs rules, can be different per country. And also you see a different approach, a different attitude by the customs authorities. So it's important to realize that, talk to customs brokers, talk to logistics service provider before selecting a country for the import into the European Union. And the Netherlands has proven to be a very importer-friendly country. It's good, you can do business with customs and you can have rulings and clear arrangement with customs officers. There was already a question on the custom duties due. In general, if you import a product, you need to pay custom duties. And the custom duty is based on the customs value of a product, which normally is the sales price of a product times the duty rate that applies. And for example, processed food, that is normally a pretty high custom duty rate, can be 15 till 20%, while for example computer devices, they are subject to a 0 rate, or telecom equipment is also subject to a 0 rate. So if you want to lower the custom duty burden, it's important to look into the value and into the duty rate. Duty rate by changing maybe the classification of a product, and by looking into the opportunities how to agree with customs on the lowest possible duty rate. On the next slide, there's a brief example about customs valuation. Evelyn already mentioned the first sale principle. You see on the sheet, there's a Chinese vendor, for example, a footwear company, selling a product to a company in Canada, and a Canadian company is selling this product to a European distributor. So there are two transactions for the same products. The goods are shipped directly from China to the European Union. In this scenario, it's possible to use the Chinese Canadian transaction value, so in this example 50, as the basis for the customs value in Europe. This could also work if there is a Canadian processing company selling to a trader in Canada, and the trader in Canada selling to the European market. Also in this scenario, under certain conditions of course, it's possible to use the first transaction price as the basis for the customs value in Europe. Important for the EU-Canadian trade is that there's an upcoming free trade agreement between the Canada and the EU. So even if the value would be high and the normal customs duty rate will also be high, there could be situations that Canadian products can benefit from this free trade arrangement, meaning that a 0 rate or a lower rate will apply. And also a huge benefit to Canadian companies can be that there's an agreement between Canada and the EU about security of the supply chain, meaning that a Canadian company that is certified by the Canadian authorities can easily ship products to the EU, and that there will be less checks in, and so the supply chain will be more efficient and can be faster. VAT is always a very difficult and complicated topic to explain. I think what I would like to do is to skip the actual lecture on the VAT as such, but I would like to take you to the third slide on VAT. What you will see there is that a Canadian company is shipping goods to Schiphol, and from Schiphol the goods are shipped to the Netherlands, to Germany, to Poland, and to destinations in Switzerland. And because of the Dutch VAT regime we have in place, and because of then the following European rules on VAT, it's possible not to pay VAT at import at Schiphol, and also not to pay VAT to customers, not to charge and to invoice VAT to customers in the Netherlands, to Germany, Poland and Switzerland, as long as the customers are entrepreneurs, so are businesses. So if you flow the goods from Canada through the Netherlands to a customer in any destination within the EU, also non-European Union countries like Switzerland, it's possible to avoid all VAT. And of course you will need a license for that, and you need a VAT registration maybe, etc., etc. But I think the main message is VAT charges are not required. Regulatory is another topic that's important to look at, especially the fact that there is European legislation on a lot of regulatory issues like labeling, on food safety, etc. But you also have to look at the national rules on regulatory. So the labeling, maybe you need to have certain wordings in national language on certain labels, etc., etc. Important main message is make sure you understand the rules, you know the rules, and to comply, to make sure that you can make the sales in the European community. And if you would be very successful in the European Union, or there's a business need, you can set up in Europe, meaning you can have your own legal entity, you can have a branch office, you can have people, you can become a taxpayer in the European Union. Everything is possible. It's not that complicated. Important message, make sure the setup is okay and comply with the rules. And also at the same time in the Netherlands there are a lot of facilities to companies in order to invest in the Netherlands and to facilitate the businesses and to grow your business. So it's not complicated to do business as long as you think about the opportunities and make sure that compliance is ensured. So at the end, the conclusion for my presentation is main message: look for one gateway into the European market, and then look for the rules that will apply and that will have an impact on your business, and make sure that compliance is ensured in order to avoid any problems. I think then you will be able to do business in Europe pretty easily and pretty smoothly, and you can be very successful. So thank you.